Prospectus Review 3, American Funds, Bond Fund of America Mutual Fund. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, St. Louis Test Prep, and the website. The sources are Morningstar, which you'll see on this video, and the prospectus that you'll see a little bit later. And I should point out that investors should carefully consider investment objectives, risks, charges, and expenses. This and other important information is contained in the fund prospectus and the summary prospectus, which can be obtained from a financial professional and should be read carefully before investing. Past performance is not indicative of future performance, and this presentation is for educational purposes only. So here's Morningstar on Bond Fund of America. There's the ticker symbol for it. And net asset value, again, is the value of the investments that they have in the fund divided by the number of shares outstanding, essentially, number of mutual fund shares. Here's the yield on the fund, 2.38%. The low, that's the sales charge. You can see that this is a huge fund, $32.9 billion under management, one of the biggest bond mutual fund money managers in the country. Expenses, according to Morningstar, are low. They're only 0.6%, which compared to the rest of the industry is low. Turnover, if you have $100 invested, how much of that $100 in investments is sold in a given year? 264%. That's the turnover, so about a little over 2.5 times a year. The category of the fund, most importantly for this top section, is an intermediate term bond fund. Now, intermediate meaning short-term bonds, probably 5 to 7 years, long-term 25 to 30. Let's call it 15 years, something in the middle. 15 years. Here's the mountain chart where they compare Bond Fund of America in blue with two indices or two benchmarks, which serve as a comparison between your mutual fund and some broader index. So the green line is a Barclays aggregate of bonds, and the number in, I'll call that orange, is an intermediate term bonds generally. So you can see that in terms of invested dollars in blue, over this time period, which is 03 to 2013, a 10-year time period, the fund has performed a little bit less than these two other indices. Risk versus the categories, which means the other bond funds and other groups of funds and groups of bonds, however they're grouped, whether they're an index or another mutual fund, is a little higher return than the average. So that's important to point out. Go a little further down here. They talk about a style map, which I think is really useful in Morningstar. And you can see that for Bond Fund of America, the style map is right in the middle. It's moderate on interest rate sensitivity, which is along the horizontal axis, which is how sensitive is the performance and the price of these bonds compared to interest rates. Quality of the bonds on the horizontal axis, which is from, depending on the rating service, C meaning very low quality to AAA meaning highest quality. Where are they? They're right in the middle. They're moderate. In fact, they tell you here that the average credit quality is BBB. The highest rating is AAA, and then it goes down to AA. And depending on the rating service, the ratings look a little bit different. So BBB is the average credit quality, and obviously the lower the credit rating, the higher the yield, because that issuer is going to have to offer a higher yield to get investors to buy something that's more risky, and it's more risky because it has a lower credit quality. So that's how that works. You get the standard growth statistics here. This is simply putting in writing what you saw in the mountain chart above. So over the 10 years, you see the fund has a 3.97 versus Barclays in the category here. Top holdings going to the bottom. I'm going to do the pie chart next, which says because it's a great visual. You can see that in orange, the vast majority of the fund is invested in bonds, and those are mostly corporate bonds. A little bit in stock, which is surprising for a bond fund, but a little bit in stock. 0% right now. Nothing in non-US stocks, 0%. Not sure why we have a blue part of the pie chart there. It just says other 4.4%. It doesn't indicate exactly what those investments are, but that's buried in the prospectus, I'm sure. 16% cash, which with a bond fund, there's two ways you can get cash from bonds, actually three I can think of. First is when the bonds mature, you're going to get your original principal back. You can sell a bond and also the interest income on a bond. Those are three ways you can get cash from a bond fund. Now you'll notice when you look at top holdings that the top 5 holdings are not corporate bonds, they are agency bonds and treasuries. So Fannie Mae is a mortgage-related entity that borrows money from investors and loans it out for people who are borrowing money for mortgages. So you can see there's 2 Fannie Mae's. There's a treasury note, which has a maturity date of 2022. It's a 10-year treasury note. And then another mortgage-related government agency note. Those are the top holdings. So the holdings are not necessarily corporate bonds. If you go down to the bottom here in sectors, we see that breakout. You see corporate bonds, agency bonds. These are government agencies, and it's important to point out that these agency bonds are not guaranteed by the U.S. government. They may have a AAA rating, which is the highest rating, but they are not by definition guaranteed federally, where a treasury bond is guaranteed federally. Now, there's an implication that these agency bonds are backed by the full faith and credit of the U.S. government, which is why they do have a AAA rating in most cases. However, technically, these agency bonds are not guaranteed by the U.S. government. Treasury bonds certainly are. The MBS means mortgage-backed securities. Pass-through probably goes into a little more detail than I do on this video. But in any case, mortgage-backed securities are related to mortgages. We borrow money from investors by issuing a bond. We put together a portfolio of mortgages, and the security for the bond is the lien on the property, the mortgage. CMO refers to collateralized mortgage obligations. So this is all about, these agency bonds are all about borrowing money from investors in the form of issuing a corporate bond, taking that money, buying a pool of mortgages that pay interest and also repay principal as people pay on their mortgages. And that's what you're buying when it's an agency note of this kind. Again, capital gain distributions. For most of these funds, they will have capital gains happening and dividend income happening close to the same time of the year. It's important to know for tax reasons, so you can pay attention when you get your statements what's going on with dividends and capital gains. They tend to come for most mutual funds at the same time of year. Important to know. It's also important to know that on Morningstar, you can go over here to the left and you can click on these documents and get the prospectus, the statement of additional information, which is essentially the longer version of the prospectus, semi-annual and annual reports, which summarizes what's going on with the fund without all the disclosures of a prospectus. You can also look at management, how long people have been involved managing this money. You can see that a couple of these folks have been managing these funds for quite a while. They've got long tenures. Morningstar finally gives their own rankings on Morningstar pillars, stewardship grade. I won't go into that level of detail, but you can certainly click on these and find out a full analyst report from Morningstar on this fund if you like, and you can go out and get that information. That's as far as we'll get on Bond Fund of America. In the next video, we will talk about the summary prospectus. Thanks very much, and we'll see you next time. Keep in mind one other thing, and I forgot to pull this up, but I will. If you go to the investor education page on the site, you'll see that we teach live classes on the prospectus review. This one happens to be on Growth Fund of America and Bond Fund of America, and you can go to the website at the page that's indicated here at the top and find out more. Thanks very much for watching, and we'll see you next time.